Hi, it's Dave Armstrong. Today is the 5th, and the market is doing horrible today. And I know everybody knows that, but it's all over the news. But I actually came across some stuff this weekend that I think is interesting to talk about real quick. And it's that, I'm looking at my screens here, and I see that half of the S&P 500 stocks now have dividend yields that are higher than both the 5-year and the 10-year Treasury. I mean, that's just unbelievable. And 40%, this is even more impressive, 40% of the stocks in the S&P 500 now yield more than the 30-year Treasury. So I added them all up. Here are the numbers. You've got 286 stocks that yield more than the 5-year Treasury. You got 263 stocks that yield more than the 10-year Treasury. And there's 200 stocks that yield more than the 30-year Treasury. I mean, it's just kind of crazy to me. And then there's a list of stocks that have dividend yields that are actually higher than 5% at the moment. So I pulled those down into a spreadsheet, and I'm looking at them here. And you've got there's names that most people won't recognize. I won't read them all off, but there's Iron Mountain, which we recently added to our strategic income fund. Macy's, Altria, interesting. Ford Motor Company, 6.5%. That Iron Mountain REIT, that's at 7.8%. Occidental Petroleum, 6.1. AT&T, 6%. Dow, 5.9%. Philip Morris International, 5.5%. And then you've got Weyerhaeuser. I mean, 5.4%. Schlumberger, 5.2. Anyway, it's just really interesting to me that with the market sell-off, people are plunging into treasuries. When the price of treasuries go up, because supply and demand, there's more demand than supply for something, the price goes up. So that's what's happening with treasuries, the actual price of them. And then bonds have an inverse relationship where the price goes up, the yield actually comes down. So because everybody's buying treasuries, the interest rate that you're getting on those treasuries is being pushed down to around the 1.8 level on the 10-year treasury right now. That's just unbelievable. So you're seeing some of these yields look really attractive. And then the other big thing going on right now is earnings season. So was doing some reading over the weekend about earnings season. It's kind of interesting to me that I was looking at it, and what's happening now looks very similar to what was happening last quarter during earnings. It was on May 5th that Trump had that tweet about increasing the tariffs on Chinese goods, and we saw May the market came back down, and that was last earnings season. So earnings season was doing really, really well up until last Wednesday, and then of course we had the Powell press release with the interest rates in the Fed, and then the Trump tweets, and then that's how we've kind of ended up where we are today. But anyway, the uptick that we were seeing in the earnings season has been quickly erased. I mean, right now the Dow's at 869. I see out on the TV right there. But earnings. Let's just talk about earnings for a second, because they are important. So I'm looking at some reports here, and 64.8 of all the companies that have reported so far have beat their earnings estimates this quarter. That's up from last quarter, and that's pretty darn good. And then I always like to look at the revenue numbers here too, and 57.8% of the companies that have reported have beat their revenue estimates. So, the earnings season isn't turning out to be as bad as everybody thought. I know there's a lot of consternation in the market right now. Everybody knows that the market doesn't go up in a straight line, and we get these pullbacks every now and then. It's not uncommon to see 5% pullbacks during the year. I've written blogs before about how the spread between the top of the market and the bottom of the market, and then where it ends up during the year. So these things happen all the time. And I don't think it's anything for anybody to get all worked up about, unless you need cash in the next month or two, and then maybe you've lost some off the top. But like I preach in the blogs all the time, I just think that one of the best hedging strategies you can use is to have cash in your portfolio for when you need it. Think out 12 months. What are you going to need cash for? You raise it when the market's at a high, and you've got it in there. And then when things like this happen today, you don't have to worry about it, because you don't have to sell stocks to get cash. course, if emergencies come up, it's not the end of the world that the market's down 5% from its all-time highs. I just think it's just the way it goes. But if you can forecast your cash needs, I just think that that's the best hedging technique you can use. So anyway, just wanted to highlight a little bit about earnings and a little bit about what's going on with dividend yields right now, and get this out to you so you can think about what I was thinking about over the weekend. So any questions or comments, please shoot me an email, let me know. Share this on all social media outlets that we have, Facebook, Twitter, LinkedIn, all those places. Please, if you see it on there, please share it or like it or comment. And we look forward to hearing your questions or comments. Thanks.